I'll just kind of start it off now. So, as you guys know, my name is Advent. As my name is on the internet, you can also call me Desi. That is my real name, or you can call me Des. Either one is fine. Um, as always, I'm not a financial advisor. Anything here is solely for educational purposes. Trading does have its risks, so please do your research before you engage in trading. So, as I wait for the next 2-3 minutes to fully start in, we'll just be looking at Adobe since I forgot the user that he mentioned he wanted me to go over, or PK, or Josh wanted to go over Adobe. Let's see. So Adobe, Josh, when you mentioned like what my thought was on it, is this more for like trading? Is this for investing? Or like, because I can look at it from two different eyes. And to the other user, yeah, we'll definitely go over risk management. And Spence, I'll answer that question in a bit when I finish this. For a long-term hold, all right, this is going to be a long-term hold. Let's look at the higher time frames. The yearly, let's get rid of these broadening formations. So the yearly triggered high, or triggered a continuation to the upside, but it looks like it's coming back down, as we can see. The quarterly has reversed from the highs, so definitely bearish. Let's go to the monthly. Yeah, monthly, it reversed back in, what is this? It reversed back in February, and we've just been bearish ever since. Let's check the weekly. The weekly looks to be curling a little bit. We did trigger short on the week, but we did, buyers did step it up. If I'm looking at this with long-term perspective, we are bearish on the higher time frames. So if I were to look into getting Adobe long-term, I would go long if this week closes green, and then next week, if it reverses and breaks this week's high, I'll put a starter position in. And then I'll probably have some buys sitting at these weekly lows. So just look at the previous candle lows, and I'll probably set buys there to average down. As far as I know, Adobe isn't going anywhere, so it would be a decent investment. Again, I'm not invested in Adobe, so besides technicals, from what I'm looking at now, definitely do your research on their earnings and their balance sheets, all that stuff, and see how they're performing revenue wise and all that good stuff, just to get a better idea of besides technicals, fundamentally with the company. So let's see, give me a sec. That was a lot of typing. So that's what I see with Adobe. Again, bearish overall with the higher time frames. We may be reversing on the lower ones, but again, I would only start a starter position in this if the weekly reverses to the upside. So after this week closes, if next week breaks this week's high, I'll put a starter position in there. Spence asked, do you get the numbers with an indicator? So it depends what you use. If you go to how to use the watch list, I've posted the Thinkorswim indicators or shared items that you can, or studies rather, where you can add the candles and time continuity to your chart. You just take those Thinkorswim links or TOS links, go to setup, open shared item, paste that in there, preview, and then import. And then after you do that, you go into your edit studies. It'll be in the list up here. You just search for it, Strat, and then you just add it to your list, and then you'll have the numbers on your chart. And then you can also go to Trading View if you guys use that. Go to Indicators, search up Strat Assistant, and it'll be this one by Ricky's Carroll. The indicator's free. You don't have to pay for anything. And I'll actually just stay on Trading View just to make it a little easier to see the charts. Cool. So let's start officially. So today for the agenda, we're going to be going over the strategy that I use. I'll also be going over questions that you guys have asked in the questionnaire before we started today, and then I'll open up the floor at the end for more questions to ask that I may have not gone over and stuff like that. So so starting off, I won't go too deep into detail with broadening formations and time continuity, just because of the time that we have today, and I want to get to your questions. But essentially, let me get a. That's not what I want. That's not what I want again. All right, let's stay with QQQ for now. So the strat, which is the strategy that I use, it's literally called the strat. So if you ever ask me what's your strategy called, that's what it is. The strat was created by Rob Smith. He was a floor trader for quite some time. And essentially, there's three components to the strat. The three universal truths, as he says. There's actionable signals, which we'll be going over, broadening formations, and time continuity. Those are the three universal truths. And once you combine them together, the strat is just a cheat code, honestly. But essentially, the strat is a price action simplified. And to me, it's the simplest, easiest strategy that anybody can use. In my experience and those that I've taught, you can be profitable in as little as a month. Again, not guaranteeing those results, but that's just from what I've seen. The results may vary on how well you understand it and how well you execute it. So, getting started with the first section, actionable signals, or more so going over, the different scenarios, as Rob calls it. So with candles, he says, there's three different scenarios, and let me actually zoom in here so we can see all of them. So you might be looking at the chart, be like, Advent, what the heck are all these numbers under your candles? So these are the different scenarios that are presented in the market. Scenario 1 is essentially an inside bar, meaning a bar that does not break the previous high and it does not break the previous low of the previous candle. So it trades inside of the range of the previous candle. An inside bar simply signifies consolidation. It simply means that the market is this is sideways, not much is going on. Buyers and sellers haven't decided where they want to take price yet. That's scenario 1. In scenario 1, we will never enter into a trade because scenario 1 is simply a setup. Nothing is telling us to get into a trade when you see a 1 bar or inside bar. Scenario 2, and there's two versions. There's a 2 up and a 2 down. A 2 up, as the name suggests, it breaks the previous high of the previous candle to the upside. And then a 2 down, again, pretty straightforward. It breaks the previous low of the previous candle. So 2 up breaks the previous high. 2 down breaks the previous low of the previous candle. And then the third scenario is scenario 3, as we can see here. A scenario 3 breaks the high and the low of the previous candle. Now there could be a 3 down and then there could be a 3 up. It depends if it's bearish or if it's bullish, depending on what's going on. Yeah, this will be a bearish one since it's a green one. But anyway, those are the three scenarios. And with the scenarios, essentially what we'll do, we'll just combine them together and get different setups. For example, there could be like a 2-1-2 setup, 3-1-2 setup, a 2-2 setup, a bunch of different things, depending how you want to start off with. Rob always recommended that if you are starting off with the strat, Don't try to take every single setup in the book. There's a lot of them. Just start off with 3 of them: 2-1-2s, 3-1-2s, and actionable signal 2s. Actionable signals are shooters, which are reverse hammers, or hammer candles. So a shooter 2 down or a hammer 2 up. Those are actionable signals. So you can take those 2-1-2s and 3-1-2s. The reason being, you don't want to overwhelm yourself trying to take every single witch setup. For me, my go-tos are 2-1-2s, 3-1-2s, 3 candles in and of themselves, and of course the actionable signal ones like shooter candles, hammer candles, all that good stuff. Making sense? Before I continue, any questions on that? We got some people typing in the chat. All right, I guess we don't have any questions in the chat. Moving on. So, the next portion of the strat is broadening formations. Broadening formations are essentially just support and resistance for strat users. Now, you can draw your broadening formations off of 2 candles. I personally, and the way I was taught, was to draw them off of 3 candles, because 3 candles are broadening formations on a lower time frame. And I'll show you what I mean. Let's go on the weekly. So let's get our ray tool out. Gonna draw that high, and then we'll do this low. So this is our broadening formation drawn on a weekly candle. Something to note: if your candle is like this, like the top one, that's just a trend line. Remember, it's a broadening formation. It's opening up the range. It's expanding the range. If you do something like this, that's just like a channel. So you always want to make sure your lines are like expanding the candle range. So like I mentioned, 3 candles are broadening formations on lower time frames. Let's go to the 30-minute. Let's go to the 1 hour and go from there. So as we can see here, price, every time it gets to the top level, it gets rejected, comes back down, reverses. When it gets back up there, gets rejected, comes back up, so on and so forth. It kind of just hangs around this range. And as we can see, price is expanding as it continues moving. So broadening formations essentially tell us where price wants to go. So as we can see, once it reversed up here, price is telling us, all right, since we're reversing from this level, we want to head back down to the next broadening formation level, which as we can see is down here. Of course, it came back down, didn't quite hit this level, reversed, came back down, and reversed near that level. And then came back up, same thing, reversed up here, came back down. Buyers broke through, couldn't sustain it, broke back down, again broke back up, got killed back down, so on and so forth. Now, something to note, and this usually intimidates people, but if your broadening formations look like this when you're done drawing them, this is how you know you're doing it correctly. Your chart should look like this when you're done. Now again, looks crazy, but when you go on a lower time frame, it's a lot more relaxed, as we can see here. So with Apple, if you took this reversal off this broadening formation on the lower side, you would have went long all the way down here at 165, and you would have been up since here. So we can see that now that price has rejected off this level, it wants to head back to this broadening formation up here. Now, of course, it isn't always guaranteed that it does that, but that will be our max, like one of our, like you can look at it as like a max target compared to the other targets that we'll be going over in a little bit. Making sense? Any questions on that before I continue? Oh, it looks like you guys have been typing questions this whole time, and for whatever reason, my screen was not showing me. Whoops. Yeah, so literally it was just like stuck on like a message 10 minutes ago. My bad. All right, let me go back through all these questions and then I'll go over the most recent ones. Um, let's see. My bad, guys. So Hernan asked, when you take a trade based on the strat, do you care about the EMAs, VWAP, or what else do you combine with? Great question. So literally how you see my chart, that is exactly how I trade. I do not use anything else. I am very, very biased once I learned the strat. So I used to be Mr. Spaghetti Lines with EMAs everywhere, VWAP, all that good stuff, RSI. For me, and again, I am very biased once I learned the strat. I do not use none of that. To me, it just makes it more confusing and it doesn't help. Again, in my experience, if it helps you, please continue using it. Do not let me dissuade you. Do what works. So let me go back in here. So literally all I use is the strat and SATI ATR, or the indicator for the ATR. ATR is just how much the stock moves in a day, which I use to select option contracts and other things that we can go over later on if we have time. All right, next question. Does the strat work on all time frames? Excellent question. It does. Just depending on what you're trading, it can be a little less efficient or more efficient. Generally, when I'm trading the strat and I'm day trading, I am mainly trading off the 4-hour and the daily candles. I I don't really go on the lower time frames because I mainly trade futures and I'm usually more active on futures than I am on options. So I usually just enter off the 4-hour and the daily. And sometimes, if I miss the initial entry or if we get a big gap up from my levels, I'll hop on the 5 or 15 minute to look for a TTO, which is a little like more of an advanced strategy. I'll go over it a little bit just to give like a brief overview, but I won't spend too much time on it. But yeah, you work on any time frame, like I mentioned. Some are more efficient than others. Rob always recommended that if you are going to be starting off, with the strat, you can, for day trading, you can focus on the 1-hour, the 4-hour, stuff like that. And James asked, so for that hammer one, you take calls and be out after that candle. It depends. Let's go to the 15-minute chart. Ooh, this is perfect. So this, I'll go into like targets and stuff briefly, and then I'll recircle back in a little bit to fully answer your question. But once this hammer prints right here, as soon as this next candle breaks the high of that hammer, I'm going to get in calls or buy shares or whatever it is that you want. As soon as it breaks this candle. As a strat user, we do not wait for candles to close. As soon as the candle breaks the high or the low of the previous candle, we are getting into that trade. Because if you wait for the candle to close, you're going to be late to the party. So in this case, I would go long above this level here. So long above. My first target is going to be the previous candle highs. So target 1. And then target 2. Target 3. So on and so forth. So for this trade, that would have been my target. And then my stop loss, depending on how tight you like your risk, I would either put my stop loss under the trigger candle, which will be this candle here. Or if you like a little wider stop, you can put it under the setup candle, which will be right under this candle, the hammer one. Again, I'm more of a tight stop kind of guy. I put my stop under the trigger candle. Personal preference. Let me get rid of this there. And smoking, yeah, I take trades off the 4 hour. Um, Josh asked, what levels do we look at in terms of ideal take profit and stop loss? Generally, and Joshy, hopefully what I just said answer your question. You get your levels off of the time frame that you're on. You can go on a lower time frame to get additional targets. Let's say, for example, this is the 4 hour time frame. Looking for Apple, if I'm going long, I would go long there. You can get one target there, so you can look at this as target 1, 4 hour, but if I wanted closer targets, I could do the 1 hour. Actually, it looks to be kind of the same. That's too close. I wouldn't use that. So technically, the 1 hour target would be a little quicker than the 4 hour. But you can also use broadening formations as targets as well. So for example, if I were to take this long on Apple, my first target's going to be this level here. But let's say if the target was like up here, I would take profit at the broadening formation first and then the candle wick, wherever that may be. You can also use the bodies as targets as well. Let's see. Panda, you asked the ones that I will start off with again. Again, I'm late to the party. Sorry about that. 2-1-2s, 3-1-2s, hammer 2s, and shooter 2s. And let me get to the most recent questions now. Gray asked, how would you know which 3 that we need to put the line, or gotcha, so where to draw the broadening formations? So for the broadening formations, we'll be drawing them on all the 3 candles. Specifically, we're going to start off on the yearly. Let me actually hide them so it's not everywhere. So the way I draw them from the yearly time frame, I start from there, and every single 3 that I see, I draw it from the beginning of time. From the quarterly, the same thing. From the beginning of time, I draw all the BFs off the 3 candles. Same thing for the monthly. The weekly, I go back about 2 to 3 years. I'm not going to go back to the beginning of time of the stock because I'll be there for like 10 hours drawing all those lines. So for the weekly, I go 2 years back. For the daily, I go back like a month or 2. And then if any new 3 candles print, then I'll go back into the chart and draw the new one. You can go down to the 4 hour. I stopped doing the 4 hour, but you can draw them there if you want to. I just do the yearly all the way down to the daily and just keep it simple. For Bitcoin, I just go down to the 4 hour because to the weekly, because I mainly swing Bitcoin. I don't really day trade it. Cool. And hopefully that answered your question, Gray. Hernan asked another question. Considering we're using the 1 hour and 4 hour time frame with Strat, 0 DTE and short expiration contracts are not the best option, right? So for me personally, I know people who trade 0 DTE. I do not trade 0 DTEs. I only trade 1 to 3 days expiration if I'm going to be trading an index like SPY, IWM, QQQ, stuff like that. Oh, there we go. You should have told me, Randy. I would have made you a speaker. Anyway,
No, it's fine.
So
I just wanted to answer on that question. Basically, you guys can hear me, right?
Yes, sir.
Okay, so for that question for the 0 DTE, you can. I mean, I actually ever since I kind of was reading into the strat, I've been using it. The 5-minute and the 15-minute, all the way up to the 1 hour, to use it for 0 DTE. Actually, it actually really works. It's part of almost every single play that I've had this week from Monday to now has been through the strat, along with obviously the RSI and that I use and the super signal. But putting them all together, As you know, as Advent said, he doesn't use any indicators. All he really cares about is the strat, correct? Now, everybody has their own trading. Everybody can do whatever they want, obviously. Whatever makes them happy, whatever's working, obviously keep doing it and don't change it. If it's working, it doesn't need to be changed. But when all things come together, as I've always said, like the RSI bottoms out and the MACD, starts crossing, and you get a two with a two up, let's say on here with the 5 minute, using this strat. All these things combined will actually help you really be assured that this play is going to work out. And it happened today, when I got the what I believe it was the two hammer with the two. If you can go to spy on the 5 minute for today, go to 9 minutes and 9:45 a.m. Pacific time. So I don't know what that would be.
Pacific. That's 12
Oh,
noon.
right there. Keep going to the right. Okay, you
Yep.
see
It,
that
it
hammer?
was it was right here.
So this is when we took those calls. I mean, you guys can go and look at the time. Look at that. I mean, that's what you were just. I don't know if that's what you were just talking about right now when you were showing the take profit and everything, but that actually happened today. So I caught that and took those calls along with as you can see, there was a falling wedge pattern leading to that hammer. And as soon as
Yep.
that hammer worked, boom, it was just kept flying. I mean, obviously I got out halfway through that, but and that's just because I wasn't here in front of the screen. I had to, go and run some errands. But that worked. So that strat is a two hammer with a two green up, as you can see. And that worked exactly the way that Advent was just teaching as of now. And if you look three candles before it, that big red candle. So right before it on that big the green candle, go one more back. So that's where I put my take profit. Um, Now, could I have this, cut half of it? Yes, I probably would have if I was still trading on the day. But that's where I set it. I set it as at the highest that candle that I saw, four candles back, and that was my take profit. Now, can you imagine taking 15, 20 contracts? You would have got out. But if you got out, one contract, two contracts, you would have been like, oh, let me keep holding it and check it out. But that's not how it works. This is what we want. We want to get that, just in case it reverses again, we don't want to be there and crying when it goes back the other way. I just wanted to make that clear that you could trade zero DTE with this, even though Adrian said, yeah, like he doesn't, and that's personal preference. Like as I said, not everybody is the same. He doesn't like to trade on the daily, but you could. It's 100% doable with this strat. Just
Yep.
wanted to make that clear.
Yeah, exactly. I know people who trade the strat, with other indicators, and it works great for them. And again, if it works for you, do not let me dissuade you. Please continue doing what you're doing. Whatever makes you money, keep on doing it.
So I know you want to continue, but I just wanted to reach up on I think that's Tati with the dotted lines, whatever. She keeps changing her names, but advice on risk management. So, advice on risk management. What I just said right now, and what Advin just said, where he said the lines of take profit, the candle prior, and the other candle prior for the part two, and the other candle prior to where you got your initial entry, that that is where risk management is. So yeah, you could have held it through this big old obviously run that we had. But if you set your profits and you take all, one to three, you set part one, part two, part three, and you set them. Let's say you have 10 contracts. Like I always said, the first take profit, I always cut half. That's just me. That's just my personal risk management. The first is half. The second time I cut, I leave, three in. So that's two more contracts that I sell. Then when it hits the next con, I sell another two. Now what do I have? I have one contract left. Now that last contract, as the final runner, will be the one that I leave in for as long as it can run, and I can just keep setting my stop loss up, and I can keep changing that as many times as I want. Every time it moves up, and otherwise you can just set it as stop loss break even, or set it for whatever you feel like you want to get out of it. 50%, 100%, that's on you. But that's called one of the one of the ways to look at risk management is to not be greedy at all and to always take profits. Always take profits. You don't ever want to see
Mm-hmm.
20, 30% and just say, I'll hold it a little bit longer. Because that's when greed kicks in. And then if it goes the other way, which I know a lot of you did today, when I don't know how many times we hit today, and a lot of you were like, oh well, I just lost everything that I made because of because of its reversal. And that's what risk management is all about. I mean, you really need to understand what you want to make on each trade, on each play, how much you want to put in on each play. And once you set that up, you are golden. And I'm telling you guys, you will be golden, and you will not need anything else or me or anybody to tell you what your take profit or your stop loss is. And that's all I have to say for that.
Thank
Hope
you,
that
Randy.
makes sense.
Yeah, like Randy said, risk management. Um, on one of my rules on my rule list is never let a winning trade go red. So literally, let's say I were to take this trade and my first target was up here and then second target, third target, etc. As soon as I hit target 1, I'm taking some cons off. I'm moving my stop to break even. So it's a risk-free trade. When it hits target 2, I'm moving my stop that I had down here to target 1. So if it reverses, I'm getting out at my first target from before. And then I'll just keep on moving my stop up until I get stopped out.
Mm-hmm.
Now, um, where do you place your stop loss for risk management? Again, it could be under this candle, the trigger candle that got you in. So it could be right here. Or
Yep.
if you want to give a little more room, under the setup candle. So it could be like this, whichever one you prefer. For me, I like it over here. Now, something to note as well, if you ever want to hold trades for like longer, if you can actively manage it, because similar to Randy, if I'm not at the computer, I'm gonna take it off and just go, if I have to go do something else, I'm not just gonna leave it there and let's see what
Mm-hmm.
happens. But if you were actively looking at this trade, let's say on the 5 minute, nothing in this chart told you to get out until it reversed up here. So we have two up, two up, two up, two up, all the way, literally for like what? That's what, 1250? Literally an hour, just straight bullish continuations, back to back to back to back. So your runner, if I had a runner from here, from down here, I would have taken it off once price reversed up here, and that would have been.
Or the one, if you can, as soon as you see something else happening, and just even a different number, like just to be safe,
Mm-hmm.
even the one. Once you see that one, that means it's setting up for either more uprise, or it could be setting up for a downslide. So even at that one, you could have taken profit, and that's huge. That's over 100%, 100%. That's
100%, yeah, definitely more than
yeah,
100% on that
that's
trade.
definitely more than 100%. Yes.
Cool. So
For just answer Smokins, because he said on that hammer, would you enter the trade on the top or the bottom of the candle to go long or short?
so with the strat, so right off this hammer, we're gonna be entering on the. So this candle here is gonna open up as a 1, and then it's gonna trigger a 2 up. So we would enter in as soon as it breaks this candle high. Now, if it.
Replay it if you could.
Oh, replay, I don't pay for TradingView, so I don't think they'll let me. Let's see if they would.
Oh no, I should play. Oh, okay.
Yeah, I use
I didn't
Thinkorswim
know. Okay,
mainly.
my bad.
I just use this.
I was just gonna kind of, well, I wouldn't show it anyways, but I was just gonna kind of show him that two next to the hammer
This one.
did not automatically become green. So it obviously opened next to that hammer, obviously, and that's where it's going to open. And
Yep.
then it kind of probably went up a little bit, and then it went back down. And as soon as it went back down and hit over the hammer's wick, top of the wick, that's when you know 100% that this is going to be a green up, so a two up,
Yep.
and that's when you take your trade. You don't want to wait too long, like he said, and you don't want to take it at the bottom where it's still a one. So if it's still a one and it hasn't become a two, and you just feel like, well, this has to become a two, then just wait until it actually becomes a two. You don't need to be, jumping into a position because that one could have not hit the top of that hammer wave, and it
Mm-hmm.
could have possibly went the other way. But you don't want to like just think like, oh, I think it's gonna happen, and it happens all the time. No, just wait for it. I mean, that's what a good 5-10% difference in your profit. Then just wait. You'd rather be for sure about the trade than to get in and it hits you the opposite way.
Yep. Yep.
That's
Exactly. You never want to enter in on a one because a one is not a trade. A one is just a setup. And you
Yep.
and you do not want to front run it because I'll tell you from experience. When I first learned this 2 years ago, I was like, "Oh, let me just get in early." Nope, cooked me. So do not enter in on one candles and do not try to get in a little early on that. Um, I'm not sure what her name's supposed to be, but what all those little lines. But
Tati.
what Tati, she said, what if the trade doesn't go green and it's like going down with no bottom and there's no previous candle? What do you mean exactly by that? And Josh, I'll answer your question next, and then I'll continue with the lesson, and we'll go back to questions later.
Yeah.
Well, if the trade is going down, then you would just go short, because that's kind of what we're following. We're following the trend. If the trend is saying go bearish, then I'm gonna go bearish. If it's saying go
Real,
bullish, then I'll go bullish.
real quickly, show her that hammer, the one that's the one to the left of it. You see the other hammer? Keep
This
going, keep going, keep going, keep
this one right
going, keep
here.
going, right there. Okay, so that's kind of what she's asking, like if it's a downtrend, how do we know? So we saw a hammer that could have been obviously possibly something to look at, correct?
Yeah. So
Even though it's a two, so it could be a 2-1-2 green, right? But
yeah.
it was a 2-1-2 red,
Yep.
correct?
Exactly.
So for Tati's question, when you see that, that means we're going to continue going down. Now, did it shoot up a little bit more? Yeah, definitely. I mean, that's the stock market. It's never gonna keep moving in the same direction all the time. It's gonna go up and down, like a wave. Um, so the reason why we got the second hammer, which is the one that came after this one, that's the main reason. So the main reason is that we got a two with a two green up, and that's when we know that downtrend is basically over. Now, is it completely over? No, that we can never know that. That's not something that we can watch. But as he said, as Edwin said, all you see after that is two up, two up, two up, two up, two up, two up. Now, as soon as you saw something different, a one, or a one with a red candle, like a red two after that, then that's when you'd be like, okay, this uptrend is over. Does that make sense? So that's just and if you guys want to learn them, I mean, I know you guys are all going to ask questions which to take the best. Just look at that strat book. It has them all there: the bullish continuation and the bearish continuation on the 2-1-2, the 2-2, all of it. So I want him to get along with the lesson. So let him get to it.
Thank you, sir. And
Question?
last
Yeah.
question I'll ask is Josh's question, then I'll continue.
Go
Um,
ahead.
if you get a lot of false triggers, again, like in Randy's case, he saw a hammer, his RSI was bottomed out, and then it reversed. So he had extra confluence for that trade. He had other things that gave him, all right, this is probably going to be high probability reversal. Let me take it because X, Y, Z, not just the hammer. So, like for example, up here, we see this hammer that printed in the beginning of the day. This candle went two up first, and it reversed, and then it became a three down. So you would have gotten stopped out on this trade if you took it long once it reversed to the top side, and then it kept on going
Yeah.
down. Another hammer that printed, granted, it did a two down, so you wouldn't have gone long on this hammer. But you
Yep.
can get candles like this where you get the actionable signal, it reverses, but then you get stopped out. And when I get to time continuity, it'll explain when you can take certain ones and when you can avoid certain ones as well. Um,
So before you go, so on that candle that you guys just saw, the two with the three, I actually did eat shit on that today. So I did futures, so it's not an alert that I put out because I wasn't 100% about it. I didn't alert it, but I did take futures and I did set my stop loss at the bottom of that hammer, and it obviously took me out. Obviously, it was $400, but I ate shit $400 on that fake out. Now, did I set my stop loss on a future? Yes. And that's a main reason why we set these stop losses, especially on a zero DTE. We always want to be able to set a stop loss of our choice. Everybody's choices can be different. But yes, I did eat shit on that. So yeah, this is a strat. No strat and no indicator, nothing out there in this world is 100% going to work out every single trader and every single time. There's no such thing. And you can ask any trader and any professional, anybody on the floor. If you ever go to New York, ask somebody on the floor, they'll tell you straight up, like, there's no such thing. We wish there was, but there isn't. So,
Definitely wish there was. That would be great. Unless you're an
yep.
insider trader, but that's a different story. So, moving on. So,
Mhm.
in this case, let's say, for example, as we can see that Randy took his reversal off the, RSI and other things to get this hammer back up. But this is where the other portions of the strat come into play. I think this was on the 15-minute that we saw this earlier. Let me bring up these BFs back on the screen. So we, as strat users, if we're just using the strat in and of itself, we're going to be looking for reversals at key levels. So as we can see, like I mentioned, broadening formations are support and resistance for strat users. We already know, candle-wise, hammers indicate a reversal signal. And if we get that off a support level, that means that's going to be potentially a strong reversal. As we can see here, printed a hammer, you take that up. And then ever since, was that last Friday, we've literally been just heading up. So you can use actionable signals and broadening formations that way, to better determine when you can take certain ones and when you can avoid them. But again, if you have other things that can give you more confluence, please use them. I won't go too deep into like how to draw them, as much as I did earlier. I have a video on my YouTube on that. And again, I want to get to your questions that you guys answered in the questionnaire later on as well. So the next portion of the strat is time continuity. Time continuity is simply looking at the big picture and seeing what the chart is telling us. For example, and I'll show you guys a Bitcoin example after this. So looking at Apple on the yearly time frame, we've been basically heading up the last few years, as we can see. Last year, we reversed down, they got bought up, and it triggered a 3 up. Right now, we're just trading inside on Apple. So, Apple overall, bullish, big picture wise. Quarterly has reversed, finally, this quarter, we reversed to the downside. Monthly has reversed since December. So, if you opened up a short and you were swinging leaps on Apple for puts, you would have still been good. It's been bearish this whole time. Weekly, reversed. It's kind of like we're inside week right now, so hasn't really decided what it wants to do. Just trading inside. Again, there is no trade. We're just waiting for the setup. If it closes out as an inside bar, we have a 2-1 setup for next week. It could be a 2-1-2 up, 2-2 down, or a 3 up or 3 down, depending what happens. Daily has reversed to the upside. So short term, like very short term, bullish. Weekly, again, is just inside. Monthly, bearish. Quarterly, bearish. Yearly, I would say bullish, but we're just trading inside. So with time continuity, we kind of get an overall idea of what the stock is doing, and then we can determine what we want to do from there. Now, let's go to, for example, if I'm looking at Apple and I'm looking at the 4 hour time frame, let's say I took this 3 up on Apple today, and my long is gonna be up here, long above. What I'm not gonna do if I take this trade off the 4 hour, I'm not gonna go on the 5 minute and be like, oh no, it's reversing on the 5 minute. Let me get out of this trade. The slower time frames are always going to show you reversals because that's just the way the market works. If you look at the 1 minute, there's going to be reversals literally everywhere, like every 5-10 minutes. So if you're looking at the higher time frame and it's saying go long, you have zero business looking on the 5 minute, getting scared out of your position because of a reversal. Because if you got in here long on the 4 hour and you got scared off this reversal, you would only gotten $1 in your favor. But based on the 4 hour, we're still good. We're still waiting for this target to hit up here, which would have been $1.50 or a delta and a half in your favor. So you would have missed an extra 60 cents on the contracts because you got scared off on the 5 minute. So you always want to look at what the bigger picture is telling you. And then of course you can go to lower time frames to look for different setups. So if I were to take this setup, let's say for today, if I missed the initial 3 up reversal to take calls, I would have waited on the 5 minute and waited for a TTO. A TTO just stands for triangle day out. It's in the ebook. It just stands for like a pullback or a retracement before it continues in the direction of the trend. So clearly, daily bullish, 4 hour bullish. All I'm going to be looking for is a reversal back into continuity. And as we see here for Apple, this is not the cleanest version, but we get the push up, we get the retracement, and then we get the reversal right here, back up. So I would have entered in here, stop loss would have been under the candle, and I would have targeted these highs. And of course, whatever other targets I may have. With TTOs, you should never ever have FOMO because TTOs will always appear when there's a trend. You just have to wait for it. And I won't go too deep into that because that's a little more of an advanced strat thing. But we can go over that next session, and I have a video on it on my YouTube as well if you guys want to check that out. Cool. So now that we have all of the strat components together, we can get them all together, of course. And I'll go to Bitcoin as an example because I missed this trade and I set my alert and I was super salty that I missed it. This is on the weekly time frame, and right here, as we can see, super bullish. We get the pullback, prints a hammer, actionable signal. That's the first universal truth. Off of broadening formation, second universal truth. And again, overall picture, we're bullish on Bitcoin. You could have went long from this level at 42.8K. You would have been in that trade until it reversed at 64K. You would have eaten super good on that trade. A trade that I got stopped out on today that I took yesterday, we can see here we have a red hammer that printed off these BFs. I took the reversal to the upside on Bitcoin. And the candle at the time, the bottom of it was around, I think like 64.2K. I had my stop at 64K. But as we can see today, I got stopped out because it wicked me out. Now, if this week closes like this and it continues up, I'll probably get back in and put my stop under this candle here to swing it back to these highs. But again, every trade is based on probability. It is what it is. I took that L gracefully. There'll be other setups. And something to note, looking at Bitcoin, if you took this 312 up reversal on the monthly, you would have been long since December of 2022 at 18.8K. You probably would have still been in that trade. If you did get scared out, you would have gotten out at 26K. But again, 8K move on Bitcoin, I'm taking that. So Those are the essentially all the components of the strat. The biggest thing, as I would always mention, practice paper trade with it until you get comfortable and familiar with everything. And keep it moving from there. And let's go over questions now that we're done with that. Actually, before we go over, let's spend 10 minutes on questions about what I went over, and then I want to get over into the questions that you guys asked in the questionnaire. Would you say SPY 506 long and SPY 506 short would take puts calls in those levels? Yeah, so for my watch list, for example, let's go back to SPY. So for SPY on the 4 hour, we have a 3-1 setup. And give me one sec. Do we have a 3-1 setup? My watch list is not showing that. Oh, whoops, I think, I gotta check. Wonder if Thinkorswim, my settings might be off on, oh, this is the weekly. I gotta check my candles. I think I was on the wrong time frame when I was checking some stuff out. Anyway, I'll redo the watch list in a bit. So for SPY, looking at this, we're gonna be going long above this level for tomorrow. So long above. And right here, we're gonna do short below. So if it breaks the short, I'm gonna buy puts. My first target is gonna be this candle low. And then, the other candle, so on and so forth. Or whatever other targets you guys may have, depending whatever you're using is. If it breaks the high, I'm gonna target this high. Something to note, when we get a big gap like this between targets, this is where I like to reference the ATR for targets. So as we can see here, for SPY, between this first target and this second target, that's a $7, almost $8 move. SPY doesn't move $8 in a day. So I'm going to take its ATR, divided by 3 or 4, and take profit in that amount. So in this case, SPY moves about $6 a day. I'll probably divide this by $1.50 or $2, or by 3 or 4, and we'll take profit either every $2 or every $1.50, because I'm not holding this whole move, which is probably not going to happen tomorrow. So after target 1, I'll probably do, what's that? 507.37. I'll do, like target 2, and then let's say target 3, so on and so forth. And I use ATR for extra targets like that when we get like these big ranges where it's probably not gonna hit. Let's go back into here. So yeah, in this case, we would just wait for that next candle to break the higher low, and then we'll get into that trade. Steven got scared out of his Bitcoin short. Double top. Oh, yeah. Don't look at the lower time frames if you're looking at the higher ones. You don't want to get scared off of your positions. Oh, man. Yeah.
We're in a 2-2 right now, too.
Yeah, we reversed back to the upside. So you see, right, this perfect example on Bitcoin. We reversed back up on the 4 hour. The first strat target would be either the body or the wick, but I would use the broadening formation as a target, and then this candle here. And as we can see, we're rejecting off this BF. Price is having trouble here.
Go to the 1 hour real quick.
There we go. This is 1 hour.
Yeah. So if you see that 2 with the 2, and then we had a long red 2, right?
Over here?
Yeah.
Yep.
And then after that, you had another red 2. So that's 1, 2, almost 3 red 2s.
Yep.
with a sort of a hammer. If you kind of if you look at it, sort of. I'm not gonna say it's 100%. I mean, it is, but it's basically a hammer with a 2 green up, and then you had a red two and another red two, and this is on the 1 hour, and then you had another obviously 2 red with a 2 green up. And if you look at the RSI, which obviously I know you don't have it, but the RSI is completely oversold, and it's curving at the moment along with the MACD. So if you kind of put those two together, where that hammer was, then you wouldn't really care for that red two that came after, and then that's the only red two that's come after, and it's barely became a two. It should have been a one, and
Yep, yeah.
if you can see it, barely like surpassed it. And then we had obviously another green and then another green red, green two up.
Yep. One thing that
And
I'll
right now, I
yeah,
would
go.
have taken I would have taken this play if I obviously if I was watching it, I would have taken this play and that would have been my price target, which is where that upside down two hammer personally. Yep, right there where that initial breakdown was.
Which is actually perfect because it literally wicked off that level right there.
Uh huh. Yep.
One thing
So
to
that's an easy what? It's an easy even if you do like a 50x, you know.
yeah, that'll been 40-50%. Well, it's
Yeah.
0.61%, about 30, like 25 to
30.
40% around there, which is still good in an hour. I'll take that.
Mm-hmm.
One thing to mention really quickly, as I showed you guys like the bullish TTOs, there's a bearish TTO right here. However, for bearish TTOs, I like to look at as H patterns. H patterns, as the name suggests, literally an H. You can also look at this as a dead cat bounce. You guys might know it by that name. In the strat, we get the push down, the pull back, continue down in the trend. Or I like to do it H pattern so I could differentiate when I'm telling people. Right now, as we can see, Bitcoin just printed an inside bar. So if you want to take this long, you just have to wait for this up to break or this bottom to break on the short side. Something to keep in mind though is that the 4 hour is still green. So if you short this on the 1 hour, be mindful that the higher time frame is going against what you want on the 1 hour. So keep in mind on that. Cool. So with that being said, before I jump into the questions you guys asked in the questionnaire, you guys have any other questions on the strat and what we went over today so far? The 312 on the Bitcoin chart. 312. Which 312?
Yeah, where I don't see any 312.
Yeah, I don't see
I
any
see it.
either. Let's try
Maybe it was 4 hours.
the 5 minute. Oh, so like this 3-1 that's setting up now. I don't trade Bitcoin on the 5 minute. I only ever if I'm gonna day trade it, it'll be the 4 hour or the 1 hour. But that's just a quick day trade.
Yeah, you don't want to trade Bitcoin on a 5 minute.
Definitely not.
That's enough.
Yeah, that candle will kill you. If anything, what I'll be looking at right here is a bullish TTO, because remember the 4 hour is green. Push up, pull back, probably gonna continue higher. Not guaranteed to continue higher, but that's what it's looking at here. Because right now, we're bullish, stopped all the longs that got in late, and now we're just waiting to stop some other people out before we head back up. Oh, the 4 hour. Let's see. 312 on the 4 hour. This 312 right here. Gotcha. I would have taken this 312. So I probably would have gotten stopped out, and I'll tell you why. One thing that I hate that you guys will see is when we get these shooter counter hammer candles. I freaking hate those. And then you'll get a shooter counter hammer, and then you'll get like a hammer counter shooter. I hate those candles so much, but it is what it is. Yeah, this trade, if I would have taken it, I would have entered on this short. I would put my stop loss up here. This candle would have wicked me out. But once I saw this print a shooter again, I would have entered on this two down. My stop loss would have been up here. And then, the previous lows as your targets. And then this candle literally just killed everybody here. So this win from this trade would have made up for this loss that I would have taken. And
And it's
spent.
also right. It's also, if you look at the 4 hour, it's a rising wedge. So as I tell you guys, if you go from that big green candle from the two up from the bottom,
Right here.
right there, go all the way to the bottom, all the way to the bottom of that. If you set a line, no, the one next to it. Yeah. If you set a trend line from there all the way up,
Like over here, or
no, there, yeah. So if you kind of set that and set another one from there, yep. So that's a rising wedge as well. So if you take a look at it, yeah, it could
yeah,
be a
yeah. Let's just say
yeah,
like, yeah, I'll say like right here.
right there, yeah.
Either one.
But that's basically a rising wedge. And look where the hammer was. Once again, just like today with SPY, but obviously the opposite side as a call, we had a falling wedge with a hammer that shot it up. This is a rising wedge, which a rising wedge is bearish. Obviously, I know it's called rising wedge; it confuses people, but a rising wedge is where you get that hammer. Almost, I would say, 90% of the time we're going down. So that's two now that you guys have seen that the strat and obviously any indicator that we've shown you guys have worked alongside each other. So yeah, if you don't want to use patterns and all that kind of stuff, that's all on you. It's up to you guys. Obviously he's been trading for as long as he has and he's been successful. But if you want to really assure yourself, now you're looking at this strat, which is something beautiful that you guys just learned. Obviously, I fucking fell in love with it. I've been preaching about it all morning long. Um, uh, that was a rising wedge with a hammer. Use the strat. You got that two hammer, and it dropped. And the same thing happened with SPY. So putting all these things together just makes you even more confident when you're taking the play.
Yep.
And that's what we really try to teach here, and that's our main goal, is just to kind of get you more confident when you're looking at a chart, instead of just looking at it like, wait, what's going on here today? Why is it dropping? Why is it going up?
Yep. Exactly.
So,
And like Randy mentioned, the patterns. I use patterns when I'm trading. Like even right here, what do we have? Like besides the H pattern that I showed you guys, we have a clear. We have one bottom. We get the retracement. We get a higher low, and we have a W. Now, for me, if I was long, I would have went long right here. Obviously, the BF as a target. My next target will be the W being completed right here. And once we hit this area, we'll probably retrace back down and then continue higher. Again, depending if the market permits. That's just what I'm assuming based on what we're seeing now. So patterns, definitely use them. They help a lot. Steven asked, are there any patterns and candles that are stronger than others, like you're more confident when you see them? Yeah, so actionable signals, like hammers or shooters, to me, those are high probability because they signify reversals. Like even right here. Let's go maybe on a higher time frame. And it also depends where they print. So let's say, let's see. Can I find a clean example for you guys? Oh, perfect. These are one of my go-to setups. In the strat, this is called the Momo hammer. A Momo hammer is a hammer that prints in the direction of the trend. So you get a big move up, you get a hammer that prints, you take that two up. I'm taking that two up, no questions asked. My stop is going to be under the center candle, the setup candle, and just take it up. So right here, obviously we're bullish, prints a hammer in the middle of the trend, taking that long. So depending where it prints, I'll take that trade. Even right here, we got a hammer near a broadening formation. While of course I would prefer it to close above the BF level, I'll still take that trade because this is just a TTO on a higher time frame. You get the pullback, all the longs that got in late get stopped out, and then all the shorts that went short up here, they get killed, and then price goes higher. But again, let's see. Do you look for actionable signals on higher time frames, or do you can do on lower time frames too? You can look for them on any time frame you want. I just based on my playbook and the setups that I take, I look for them on specific time frames. If I'm day trading, like I mentioned, I take setups on the daily and the 4 hour initially, but if I miss those entries, I'll look on the 5 or 15 minute for those setups as well. I'll show you NVIDIA. I think this happened last week on the 4 hour, I believe it was. Was it the 4 hour or was it the daily? No, it was a 4 hour. Yep, right here. Bullish, hammer, rocket up. Momo hammer setup right there. I took that trade, did not even question it. Took it right up. So if you see a Momo hammer print, you can assure yourself that the probability is high. Again, it does fail. Nothing is 100%. But in my experience, high probability. Even right here, big push up, hammer, pushes up. While it failed eventually and reversed back down, you still would have ate. That was a 20-point move. You're making money off that, I'll tell you that. Cool. I will stop there with the strat stuff. I'll spend the next 15-20 minutes talking to you guys about the questions y'all asked in the questionnaire. And if you guys are here, the ones that asked this, I just need some clarity to better answer it for you guys. Somebody asked how to be profitable and how to make money. That's a big question, but the simplest way I can answer it is, there's different components to be successful when you're trading. Definitely have a journal. Make sure to journal all your trades, see what works for you, see what doesn't work for you so you can improve. Proper risk management, as me and Randy mentioned earlier today, risk management is key. Again, you are going to lose trades. It is part of the business. Randy lost today. Well, not fully, but he lost some trades today. I lost today. It's perfectly normal. It's part of the process. Nothing is 100%. So you need to come into the right, when you're going to trading, going with the right mentality. Because if you go into it thinking, I'm going to win all the time, when again, you can win a lot, but you're going to lose too. And if you have issues losing, you're going to have a real hard time. Because I find people who have trouble losing, they revenge trade, blow up accounts, and you do not want that. So again, understand. When you're going into trading and you develop your plan and your system, if you follow your plan and the trade went for you or against you, it doesn't matter. You followed your plan. You did your job. For example, today I took 4 trades. 3 of them lost and 2 of them won. I was salty about the losing trades, but it is what it is. I followed my plan. That's all I can do. It is not up to me if it hits target or not. That's up to the market. So as long as you do your job and follow your plan, that's okay. And how you react to when things happen. For example, if some people take losses, they get upset, revenge trade. That's poor performance. You do not want that. And again, I'm human. I got upset when I lost those trades. But the difference is I didn't go back in to get that money back. I waited for other setups to appear. They appeared. I took them and I made money when I waited. And when I took those losses, I took a step back from my computer, went for a quick walk, came back refreshed, got back to it, made some money. So again, you do not you want to go into trading with the right mentality. You do not want to come into it with a get rich quick scheme, which again, you can make a lot of money trading, but take your time with it. Everybody is on their own journey. You have to start somewhere. You'll get to those big numbers that you eventually want to get to. But again, take your time with it. So, journaling, mentality, building your system, all that good stuff, to be able to be profitable in trading. Risk management, again. Somebody asked as well, does it work for, hold on, let me see this. Does it work for crypto and futures? As we've discussed, yes, it does. You can use it on anything. You can use it on Forex, literally whatever you want. It's based on price action, and whatever has price action, you can use it on. Another question somebody asked is charting on the appropriate time interval. Again, for me, I prefer, like, when my watch list is based off the 4 hour. Sometimes I'll use like a daily or weekly or even the 1 hour, but those I don't post because they may not be as high probability. And since you guys are taking trades that I'm not fully guiding you on, I would want at least to give you guys the higher probability ones. So you can start charting off on the 4 hour or daily and then go from there as you refine your system. And Spence, yes, I'll go over my watch list as I finish these next few questions. And I'll show the Momo Hammer again. The question that I asked was, what is something people are struggling with in their trading, being profitable and making money? Again, if you can give me insight on what exactly that means, because that's kind of vague, like, are you letting winning positions go red? Are you, YOLOing into trades? Are you FOMOing into trades? Are you over leveraging? I just need better clarity on that. So if you are in here, you can let me know so I can better answer that. Again, no judgment. We are all here to make money. We are all here to learn. I messed up big when I first started. It is what it is. But I'm here today because I asked questions and I owned up to my mistakes to get better. So don't ever feel judgment if you make mistakes and you want to ask questions. Again, we're all human. This is a learning experience, and trading is difficult when you're starting off. Oh, Josh, great question. I forgot to say this in the beginning. When you're trading the strat, you need to be using regular trading hours, not extended, because you're going to get incorrect candles. For example, looking at NVIDIA, we have a 3-2, regular trading hours. If I go to extended, we have a 2-2-2. That is incorrect. It's a 3-2 that we have. Now, of course, if you're trading pre-market, you can use the candles that way if you want. But when we're trading the strat, regular trading hours, and when we're getting our levels. You can use the pre-market and after hours as extra levels if you want, but the way Rob teaches it, we just use regular trading hours. The next question, before I get to the other questions in the chat, somebody asked, having a structure and rules to follow for entering a trade. Again, this question, it really depends on the individual and what works for you. I'll give you an example for myself. If I'm going to take a trade off the 4-hour time frame, whether long or short, I'll give you an example. As we can see here, this was for today on NVIDIA. We had a big gap up because the candle opened up here, as we can see, and then it closed down here. Clearly, price gapped up for my entry, about 11 points. I'm not going to buy calls all the way up here because it already blew past my entry, and that's $11 that I'm losing if it goes against me, if I go long. So I'm going to wait for a TTO, and let's see if we have one. Again, this is the 5-minute time frame. As we can see, we didn't get a TTO, or at least a clean one. We got the push up, the pullback. It did reverse on this 2 up, but that would have been a losing trade for me if I took it, which I did not. and I would have gotten stopped out. The trade that I did take today, though, since I saw everything turning bearish, I went to the 15 minute to look for an H pattern or bearish TTO. And we got that right here. Got the push down, push up. You could have taken this double inside, 2 up, and it would have hit one target there. But then what I took was this 2 down on the 15 minute time frame. So I took this 2 down. My stop loss was above this candle. And then my target was these previous candle lows, low, 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 etc. And literally just died off all day. So with the question that was asked when they mentioned having structure and rules to follow, my rules for today, because it gapped up, my rule is do not chase a trade and do not FOMO. So once it gapped up, I'm not going to FOMO. I'm waiting for a TTO, which I'll go on the 5 or 15 minute. I didn't take this one because it doesn't look the way I would prefer it to look compared to other TTOs. As we can see here, we see this bullish one, push up, push down, we get the reversal back up. Compared to this one, it's just like almost straight down without that like clean, like kind of slow grind down, if that makes sense. So I'm very, very, very particular of the setups that I take and the way they look. Let's see if I can show, like even here, we get the move up, we get the push down. It kind of just like hesitated. You could have taken that 2 up or that 2-1-2 up or the 2-1-3 up, literally whatever you want. So in the sense of having a structure and rules to follow, that really depends on the way you trade and the system that you develop. And then you base your rules off of how you trade and things like that and your setups.
I got a question for you, Admin.
Yep.
So would this also work for penny stocks? Is my question.
Oh, 100%. I stopped.
Yeah, I haven't done it yet.
Give me a ticker you're looking at, and we'll look at it together.
I mean, I'm not looking at anything right now, but let me give you one. Hold on, I had one actually from my screener. Look at AGBA.
AGBA. Let's go to the 4-hour. So AGBA. Let's see. We have that huge gap up. So right now, one of two things is happening. We're probably preparing for a TTO on the 4-hour time frame to head back higher. Or we're just straight reversing back down. We just have to see. But to me, what's telling me that this might be a TTO, because we can see the big move up, the slow, like it's slowing down and getting wicked out. And then even the wicks on the retracement, we're getting bought up on these levels, which tells me this is probably a TTO forming to head back higher. So what I would like to see, if we are going to head higher, more than likely, tomorrow might be an inside on the 4-hour, or it may continue down. Again, we'll have to see what happens. More than likely, once we... Go ahead.
Sorry, I didn't mean to cut you off. If I want to show you one that kind of has like that already created a head and shoulder. Mm-hmm. ANNX. ANNX. I believe that's the daily. Yeah, if you can see, it's kind of like a head and shoulder.
Oh, yep. So looking at the daily, we got the left head, the left shoulder, the head, and then you can look at it here or even here. Mm-hmm. And then right now, looks like we reversed. We gapped up today, and then it went 3 down. So we're bearish right now.
It came up on my screener today, so I believe that's what that 3 possibly is.
Yeah.
Or it could be 2 ones. Was that the same day? No, that's Friday.
Yeah, this is Tuesday. This is Monday. This is Friday. Last Friday.
Yeah. So that's why I gapped up.
Yep,
and I mean that's why I popped my screener, because of that 3.
Yeah, even then on this 2-1. So yesterday you could have taken this 2 up. You could have placed your stop under the 1. And then I'm sure it probably went higher pre-market. I just don't have it turned on. But even from your
Yeah.
entry, you've gotten what was that, 5%? Let's
Mm-hmm.
check pre-market. Oh, that's the daily. Whoops. Yeah, pre-market, it went to $5. That would have been a 10 to 12% move
Mm-hmm.
from your entry.
Okay. I had it on my watch list on Monday, and I didn't take it, but yeah, it did pretty good. But I just wanted to see if it actually, if the because as you can see, that's a 2-2-2, and then there was a 2-1-2.
Yeah, the two one
So
two, I would have definitely taken that. No questions asked. 2-1-2s are one of my go-tos.
yeah. All right.
Next.
Although I continue with their questions, I don't want to.
Yep.
They're probably gonna end up leaving.
Oh yeah, looks like Smoking had to go. Can you show example on how you actually before I go on that? Gray asked. Actually, before I get to that, Spence said, "So since Spy is most likely going to gap, so since Spy is most likely going to gap down tomorrow, what do you do with the watch list?" Um, if Spy is gonna gap down, I don't know if it's gonna gap down. We have to wait until and see what tomorrow holds. I just go by what the chart is saying because I can't say it's gonna gap down unless we do gap down. We just have to see because we can just as easily reverse up. We have news at 8:30 in the morning for jobless claims, so that can pump us or it can dump us. We just got to see.
Mm-hmm.
And yeah, I would enter on the break of the inside bar to the upside or the downside, either one. And let's see, Gray said to check NVIDIA for yesterday on the 4 hour and show the 1-2 on the 4 hour. The 1-2, you mean this 1-2 right here? Or I guess in this case, the 2-1-2 anyway. If you mean this, what I would have done yesterday with that gap up, again, it gapped up for my entry, so I wouldn't have smacked calls. I'm looking for a TTO on the 5 or 15 minute. And this was, let me highlight the candle so we don't get lost. This was yesterday. Yep, so what I would have done in this case, since we gapped up for my entry, I would have waited for the pullback. I would have gotten in on this reversal to the upside right here. This 2 down, 2 up reversal. Or this 2-1-2 up. Either one you could have taken. That's what I would have done for that NVIDIA trade. Let's see. And I'll probably answer like 2 or 3 more questions since I want to eat and I'm on the East Coast. Yeah, so the 2-1-2, you enter in as soon as it breaks the candle high. If it gaps up, like I showed in NVIDIA just now, you look for a TTO. You do not want to smack it when it's $5 or $10 away from entry because your stop loss is going to be a lot bigger. You don't want to get cooked. Like today, if it gapped up and you just bought calls, you would have gotten destroyed. Yeah, I'll be looking at. I prefer to look for reversals. The continuations are very, very rare in the example that I just showed on NVIDIA for that day, on that 2-1-2, continuation. But I would have taken that reversal. Steven, you asked the number strategy on my chart. What do you mean? Like the numbers that are here? If that's what you mean, that's the Strat Assistant that you can find in the indicators by Ricky's Carroll, Strat Assistant. The last thing I'll go over is my journaling. I'll show a quick example and then I'll end it there. Let's bring up my journal template. Let's go to trading journal template. All right, let me know if you guys can see my chart.
Yes.
Sweet. So, of course, You can physically write down your trades. I personally use TraderSync to upload my trades because I'm lazy, and then I just physically just type out all my notes. And I'll go over each number here, and of course you can add other things if you want. Um, but like I mentioned, journaling is one of the most important things that you can do in your trading because it's going to tell you a lot about yourself, what you need to fix, what you need to work out, and improve on. So the first thing, of course, if you use an online trading journal like I do, it's already going to have the date and the day. But this is important to keep track of because we need to determine, um, you know, what are our most profitable days and which are our least profitable days. For example, for me, based on my journal, I make the most money on Mondays, and I usually lose money on Friday. So what I got from that is I can size regularly on Mondays, and on Fridays I'll reduce my position size. So if I do have a red day, it's a low red day as opposed to a regular red day. Um, and then of course, let's say for the sake of the conversation, uh, a specific day when like FOMC comes around and you end red on those days, you can look at your journal, be like, all right, I usually end red on FOMC. I'm not even gonna bother trading those days because I always end red, and you just want to avoid, what doesn't work. Obviously, realize P&L. That's gonna be there regardless how much money, if you made money or lost money. Number three is important. You want to figure out, what are you trading? Are you trading crypto, futures, penny stocks, options, all that stuff? And what tickers are you trading? For me, I mainly trade futures now. I do still trade options almost basically daily, but most of my money comes from futures. So for me, um, once I discovered, futures works better for me, I mainly focus on that now. I still make a good amount of money trading options, but for me, futures is easier for me because I can automate everything, and I'll show you guys an example in a bit in what I mean. Of course, you can automate everything for options too, but just I can do it way quicker for futures, and I'll show you guys after the journaling section. And if I forget, just remind me, please, because I don't want to get sidetracked. So again, you want to write down what you're trading, the instruments, the tickers, and you could determine where you're making most of your money on. Like one of my students, all she trades is IWM, and that's it. She does not trade anything else. That's her bread and butter. She makes all her money from that. She got a 900% trade yesterday based on the strat on IWM. Um, Cool. Next portion, the time of trade. This is very important because you need to determine what are your most profitable times to trade during the day. For me, most of my money is made between 9:30 a.m. to 12 noon Eastern. So I mainly focus on that time, and then, you know, I just get off. Because what I saw in my journaling is that in the afternoon, if I still stay there trading, I get mentally fatigued and I usually make mistakes or just end up giving some money back. So I mainly trade in the morning and then I just call it a day. Yesterday, I finished in the first 40 minutes and I just got off. Today, I got off like at 11:20 and then I just called it a day then. Um, but again, see what works best for you. The more time I spend on the chart, the less I perform efficiently. So I like to limit my time to maximum of 3 hours a day. And of course, the next portion, the time frame you took the trade, so we can find out our most profitable time frames, and we can find out, which time frames work best for us. Like I mentioned, for when I'm trading options, I prefer the 4 hour and the daily to take my initial trades off of. If I miss those entries, I'm gonna go to the 5 and 15 minute. I only use basically those four time frames when I'm trading. Sometimes the 1 hour. Other than that, that's just what I use. And that's where my money comes from. For futures, since I trade that very differently, I mainly trade futures on the 2 minute, 5 minute, 15 minute, and the 1 hour. And that's it. Now, for futures, I only use the strat for two setups, or one setup really. But otherwise, I use fibs and some ICT concepts for futures mainly. And then, of course, the reason for the trade, what got you in it, what did you see? Let's use Randy's example for today. He got an actionable signal. We got the hammer. We got RSI bottomed out, and MACD or MACD, whatever you use, that's giving confluence, and then you take the trade. That's pretty much the reason for that trade. And then, of course, this is a portion that a lot of people do not um, that do not put. Like a bunch of students that I work with and other traders that I've helped, um, they don't do this. This part is very important. You need to write down how you were feeling during, before, and after the trade, so you can see what some bad habits you may have. For example, when I first started trading, I would literally wake up 2 minutes before market open, place a trade, not make money, and be upset. And then I would revenge trade to get that money back. Horrible, horrible habits. So now I already know I'm gonna wake up an hour or two before the market. I'm gonna do my routine. I'm gonna get some breakfast. Make sure I eat. I'm awake. I'm ready to go. No more trading in bed. No more being sleepy and taking trades. I'm gonna be locked in when I'm ready. And of course, this could, and that this portion could be good and bad. You know, if you're making money in a trade, you can start to get that like greed, like, oh, I'm at 100%. Let me go for 200%. That's something bad too, because instead of following your plan, now you're getting greedy and you want more. And then what ends up happening? It goes to 50%. You're like, it can go back to 100, and then it goes to zero or negative. I've been there. I'm sure other people have been there too. You do not want that to happen. And then, of course, what type of trade was it? Reversal, breakout, scalp, day trade, swing trade, etc. Pretty straightforward. And then the notes section, just write down, whatever it is that happened that day. All of this makes sense to you guys? Cool. The last thing I'll mention is I'll spend like 2 minutes on this and then we'll wrap up. James asked, is futures easier or simpler than options? Great question. Let me bring up my chart here. So I use Tradeovate to trade futures, or you can use prop firms as well. So for futures, what I love is there's no theta. So let's say, for the sake of the conversation, let's say I place a buy order here. Actually, do a sell so it can be a little cleaner. The green lines that appear above and below the red line is my take profit and stop loss that I have programmed into the system already. So literally, put my order, boom. I can walk away and it's going to take me out at profit or at a loss. I don't have to babysit anything. So that's one thing I love about future. Super, super fast to get in or out. Of course, you can do the same thing for options, but depending what broker you use. But I can preset my take profit and stop loss levels. As long as price doesn't hit my take profit or stop loss, I can be in that trade for 2 hours and it wouldn't do anything until it hits one of those take profit or stop loss levels. So that's one thing that I love. Definitely do your research on it for futures and stuff. Randy, if you want, I can post basically like a huge post of resources for futures, and we can just pin it so people can reference that later on. Cool. What kind of capital do you need to trade futures? That really depends on the broker that you're using, because the margin requirements are different. Let's say if you wanted to trade one contract of ES on Tradeovate, you need $500 in the account at least. But people usually recommend double of what the requirements are. So if you're gonna use one ES contract, which is $500, you need to have in the account, You should probably have 1,000 just to give you that leeway. But again, it depends on the broker. On Thinkorswim or Schwab, they are not lenient with margin requirements. So if you try to trade futures on Schwab, let's say we go to ES, which is the S&P 500 futures, they require that you have in your account $17,721 to trade one contract. And the margin requirements can fluctuate depending how volatile the market is. Last week this was at 10,000. This week it's at 17K. Probably because of all the Iran and volatility going on. So again, it depends on the broker. I won't go too deep into it. From there, I'll just post after we're done here. I'm gonna go ahead and just put like a mass post about futures, and Randy, you can pin it so people can reference it later on. For those who missed this, I'm gonna upload the video once it finishes processing, and I'll post it in the watch list, the how to watch list works area, so it could just be easy to find. Cool. Before we wrap up, what was everybody's biggest takeaway from today? Yep, definitely entries. Those are always important. Yeah, with the strat, Josh, it's gonna make it super easy for you because the strat tells you when to get in, when to get out, and when to do nothing. Yep, definitely don't be greedy. Always gotta take profits. Never, you guys can add this to your rule list. Never let a winning position go red. Once it hits the first target, you should be trimming and moving your stop to break even. And of course, if you guys ever do want to work with me, I think I have the link posted there, but I'll post it again just in case. I offer one-on-ones and stuff like that for whoever might want a more personal approach to getting helped out in their trading. Just to clarify, your first take profit will be the previous candle high before the setup candle. Correct. So in this case, with this, whoops, that is not what I want. This 312, if it goes 312 up, my first target is going to be the previous candle high. But again, if the target is too far away, like let's say if it was like, let's look at the daily for an example. The daily from here to here, that's like $7. It's not going to move $7 in a day, more than likely. It's unlikely because it only moves $6. So in this case, I'll take the ATR divided by 4 or 3, and then take profit every $1.50 or every $2. It goes in my favor. For shorts, James, it's just the opposite. If you go short, it's the previous candle lows. If you go long, it's the previous candle highs. Sweet. All right. Well, everyone, thank you so much for coming out, asking your questions. I'm gonna once I finish this processing this, like I mentioned, I'm gonna post it on I'll post it in the channel so you guys can rewatch it and go from there. Any questions, again, feel free to reach out, or if you want to work with me on a more personal level, let me know. Like I mentioned, I offer one-on-ones, and we'll go from there. How do you differentiate? How do you differentiate between looking for setups? Oh, whoops. Looks like test. All right, looks like we got kicked out. Anyway, How do you? The last thing I'll answer. How do you differentiate between looking for setups on the 4 hour versus the 1 day? Cool. Yeah, looks like it just like got kicked us all out for whatever reason. Josh, how to differentiate between looking at the setups of 4 hour and daily? It's the same exact thing. Like I mentioned before, just look at the previous highs and lows and use that as your long or short levels. If it's the 4 hour, same exact thing. It's just on a different time frame. All right. Thanks again for everybody coming out, asking questions. I'm going to go ahead and end this now. I'm going to upload it and post all that stuff in a bit. And I'll talk to you guys on the internet.